You know that feeling, right? You're filling out a form for a loan, maybe a mortgage, and it just feels like this endless maze of questions, and half of them don't even seem to apply to you. Well, today we're going to dive into why that whole process is so broken for so many financial products, and, more importantly, how technology is finally trying to fix it.
So let's just get right to it. Why is it so frustrating? You're trying to get something specific, like a home equity line of credit or a loan to build a house, but the application you're filling out feels like it was built for something completely different. The short answer? It probably was. It all comes down to a one-size-fits-all approach that, frankly, just doesn't cut it anymore.
And this right here really paints the picture, doesn't it? On one side, you've got your standard mortgage. It's a well-worn path, pretty simple, pretty linear. But on the other side, you've got all these specialty loans, each with its own complex, unique needs. They need totally different information. Trying to jam both of those into the same form? Well, it's the classic square peg in a round hole problem.
And that problem has a name. The industry is actually calling it mortgage application gridlock. It's this idea that the whole system is just stuck, completely bogged down by its own inflexibility. And it's causing headaches for literally everyone involved.
So, what's pouring gasoline on this fire right now? The current market. We're in a period of high interest rates, and that means the number of people applying for those simple, standard mortgages has dropped a lot. This puts a ton of pressure on lenders because they've got to find new ways to actually generate business and stay afloat.
So what do? Well, the obvious move is to diversify. Lenders are shifting their focus to different kinds of products. Things like home equity lines of credit, you'll hear those called HELOCs, or loans for construction projects, and even agricultural loans. But here's the catch. Their existing systems, the software they rely on, were never built to handle all this variety.
And that's where the real pain points show up. Since these specialty loans don't fit into the standard digital mortgage application, which is known as the 1030, everything grinds to a halt. Lenders fall back on manual processes, sometimes even paper forms. For you, the borrower, it's a clunky, confusing, and super frustrating experience. And for the operations teams inside the bank, it's an absolute nightmare of inefficiency.
Okay, so the old way is clearly not working. It's a total logjam. So, what's the fix? Well, this brings us to a potential solution, a new approach designed to completely break that gridlock.
It's a platform enhancement called Dynamic Apps 2.0 from a company called Floify, and the core idea is actually pretty simple. Give lenders the power to build their own completely custom digital applications. And here's the kicker. They can do it without needing a whole team of software engineers to write code for every little change. This quote from Sydney Barber over at Floify just perfectly sums up the whole philosophy. It's about tailoring the application to the purpose of the loan. When you do that, you can get the right information right from the beginning. Think about it. That simple change gets rid of all that pointless back and forth and all that frustration. So you're probably wondering, how does this actually work? How do they put this into practice? The key is giving control back to the business folks, the people who actually design the loan products. Which brings us to this idea: customization, not coding. It basically boils down to a simple three-step process for the lender. First, they design the application. They get to control exactly which sections and questions show up for every single type of loan. Second, they can manage all those different versions from one single central place. And third, they can automate what happens next, like automatically asking for specific documents based on the answers someone gives.
And this is huge. What this really means is speed. It means freedom. The business teams don't have to get in a long line and wait for their internal IT department or some outside company to build a new application for them. If they want to launch a new loan product tomorrow, they can build the application for it themselves, and they can do it fast.
All right, so this is all really cool tech, but what's the bottom line? What does all this actually mean for the lending business? Well, it's a huge shift in how they think about their most basic technology. This quote from Joshua Steffen really nails it. The point of sale system, or POS, that's the software that takes the application. It's no longer just a simple tool. It becomes a configurable growth platform. That's a fancy way of saying it's a strategic asset that lets a lender adapt and grow their business on the fly. And the benefits are really concrete. Lenders can suddenly launch new products way faster. They cut down on all that boring manual data entry for their teams. The information they collect is cleaner from the get-go, so loans get to the underwriting team faster. And maybe most important of all, a better experience means fewer frustrated people giving up halfway through the application. So let's pull back for a second, because while this one platform is a great example, the change it represents points to a much, much bigger trend, one that affects all of us anytime we need to borrow money.
See, this isn't just about making a mortgage application a little less painful. This is about a massive, industry-wide shift away from those old, rigid, one-size-fits-all systems. The future of finance is heading towards experiences that are flexible, that are smart, and that are personalized to what you actually need in that moment, whether you're getting a car loan, a small business line of credit, or just fixing up your kitchen.
And that really leaves us with one big final question. With tools like this becoming more common, tools that allow for this level of deep customization and speed, are we finally seeing the end of the one-size-fits-all era in finance? It's a powerful thought, and the answer is going to shape how all of us deal with our money for years to come.